David, about what's playing out as far as some of the energy levels, because we're back down around 85 to 90 right now. We've kind of found comfort in over the last few days, it seems like. Below 100, not far from, but still holding above some support right now. Really haven't opened up the door to the downside relative to what we've seen in terms of some of the other commodities. And, for example, gasoline, RBOB has come off significantly relative to the WTI. What are you looking at as far as levels there?
Well, first, fundamentally, and I know you know this, OPEC recently decided to cut production targets by about 100,000 barrels per day, and that's not that big a deal, but it has, that's a relatively minor production cut, and it comes as a surprise, I think, to many energy analysts who expected OPEC to stay the course with its production policy. Our forecast for crude oil, as you know, is that if crude could close monthly, and particularly in the third quarter of this year, above $88 to maybe $87, then we would expect crude to go back up to 118 to 119 and do so in the fourth quarter of this year. That's a kind of a big call. As you can see, though, we're not really doing that well at the 87, 88 level. The month hasn't closed yet. The quarter hasn't closed yet. But we are concerned because, listen, if they can't get above $88, then I would expect in October to see $82 to $81, if not lower, in crude oil.
All right, 83 to 81. If we can't hold these levels here, it sounds like. Let's talk a little bit about, and you mentioned the fundamentals here, David. For a technician, it's nice to have confidence in the levels and the patterns that you rely on, because when markets become this dynamic, as we're seeing right now with energies, the fundamentals, for example, you've got OPEC, you mentioned, you've got the U.S. dollar we were talking about a minute ago, but more towards indices, but obviously a factor when you're talking about crude, strength there oftentimes weighs on crude, it weighs on demand in general. Russia cutting off supplies now. I mean, so you know, headline risks. You've had, ultimately it's tough to determine what exactly is driving price sometimes to these levels. So to be able to identify these levels becomes more significant, or lack thereof, in terms of ability, as you were just pointing out, as far as some of these, price targets. And oftentimes I make it real clear, it's not so much if you can get to these levels, but oftentimes it's as significant or more significant if you can't, and the retreat away from them.